We were talking to Peter Krause in the last hour, just trying to understand what can be taken away from these earnings reports and what can't be, and what numbers we actually should be focused on, if any at all.
So good morning, Andrew. Look, I would resist the inclination of saying that this earnings season doesn't matter. We should just look through it. This earnings season is providing us a ton of information. And that's important in a market that's differentiating more between individual names. So there's a lot of focus on balance sheet strength. There's a lot of focus on cash burn, on access to markets. That's important because it tells you how well companies will navigate this very difficult period, because the better they navigate it, the more they emerge to a less competitive environment in which they can respond really quickly to. So there's lots of data in here. And I think what you're seeing is people are looking very seriously at this data and differentiating even more among names that are well positioned for the journey and well positioned for the destination.
And so you look at the banks. Peter was talking about the banks in terms of the reserves. So we're all trying to figure out sort of what are the numbers to focus on. And that's what I'm still focused on, because I think we just don't know. What you said we learned a lot this week. What did we learn?
So we learned, for example, that balance sheets really matter, because the biggest risk out there for investors is a cash crunch for a company, because things get really hairy then. You get diluted, or even worse, you may end up getting restructured, or the company may go bankrupt. So we've learned a lot. On the banks, the major question out there on the banks, Andrew, is how much credit risk are they going to take going forward? And they are torn, and understandably so. On the one hand, this time around, they are part of the solution. They're not the problem, and they want to be part of the solution. But on the other hand, being part of the solution means taking on more credit risk. And taking on more credit risk in an environment where we're not quite sure how the restart is going to go. We're not quite sure whether we're going to have another round of the pandemic or not. So there's a lot of uncertainty about credit risk. And that's the dilemma that different banks have. Meanwhile, companies are doing what I would do: raise as much cash as you can from every source that you can right now. When
you look at where we are, one of the things that we are all trying to figure out, and we asked again Peter Krause the same question: what you think the market is saying the timeline is, not what you think the timeline may be, Mohamed. I'm curious. Well, I'm curious actually both opinions. The reason I ask is we had Rich Lesser on from BCG, who's spending a lot of time with corporations inside boardrooms and talking to people in the corner office, if you will. And his timeline was much longer, I think, than anybody's in the market currently.
So it's hard to tell what the market thinks the timeline is, because there are two factors going on here. One is the extent to which the market is factoring in the other side of the U. But the other, as important, Andrew, if not more important, is the comfort that the market has in the Fed being there as a backstop. So if you look at different markets, it's actually very difficult to figure out which is which, especially when you get to the equity market. It's a little bit easier up the capital structure, but when you go all the way down to the equity market, these two factors are playing out, and it's very hard. In terms of what's ahead, Andrew, I think the key issue is that we are reopening, and we are not reopening in a perfect way. We're not even following the guidelines of the White House. We could complain about it, or the other side is take it as a natural experiment. We're going to learn a ton in the next few weeks about how does the infection actually spread, and that's very important. We're going to learn about how people react. Are they going to re-engage in the economy or not? How do companies react in the differential speed economy? And the key issue, I think, for us, but especially for the federal government, is to collect this data, because this data is going to inform and influence what we do next. We may have a rocky restart, but the important thing is to learn, modify, course correct, and then go forward in a better, healthier, and more economically viable way.
Hey, Mohamed, I'm just thinking through how the money that Washington is granting these days, how those packages have changed pretty dramatically, and how public perception has changed. You have Ruth Chris, who's giving back the $20 million today. You had Shake Shack giving back the money. with the understanding that, okay, we should reserve this money for small businesses that don't have access to the public markets. These are the places that need this money. And that's different than what we thought this plan was going to be 3 or 4 weeks ago. We thought that this was money for everybody because nobody had done anything wrong. This wasn't moral hazard. So we were going to kind of say, okay, we'll protect everybody with taxpayer dollars. There aren't enough taxpayer dollars to go around to do that, which means if the public companies that do have access to the public markets are left to their own devices to make sure they raise more money, I'm not sure the market has factored in the idea that all of those losses are going to come from the shareholders. The idea being you're from the public markets, your shareholders, you have to be ready for that. Is the market reflecting that to this point? The idea that if you do take money from the government, if you're one of the airlines or Boeing or something, you're going to be taking it and giving them a pretty substantial stake in the company at that point. And if you don't need the money, if you don't need a bailout from them, if you're going to be getting more money from the public markets, that's going to dilute the existing shareholders. How does that kind of work its way out?
So there's two issues here, Becky, if I may. One is I think it's absolutely right to focus on small business. Markets are open. Capital markets are open. Companies are raising a ton of bond financing, not only just in investment grade, but in high yield. And we can thank the Fed for that. The Fed has reopened access to the markets. Whether it should have done it the way it has, we can have a long discussion. But the reality is, if you're a public market, the markets are open for you, and are open for you at relatively low absolute yields. On the other side is where we're going to come out, and that relates to the robust discussion that Andrew and Joe had. There are certain realities. We're going to come out with a lot more debt. We are going to come out with a complete entanglement of the public sector in the private sector. These decisions of bailouts are not being made according to principles. They're being made in a very ad hoc fashion. So it's going to be a spaghetti ball of relationships that you're going to have to unwind in a market-based system. We're going to come out with companies rewiring their supply chains. Put all that together, it's lower productivity. On the demand side, we're going to come out with people perhaps more frugal, spending less. So you have sluggish demand as well as lower productivity. We've got to embrace that this is out there, and let's do things now that lower the probability that we end up with low growth and high debt. We can do things now, Becky, as we formulate policy that address these longer-term issues. This is not just about relief. This is also about what comes thereafter. The mistake we made in 2008 and 9 was that we won the war against the depression, which was great, but we lost the peace. We did not secure a peace of high growth, and we ended up, as you all discussed, in a paradigm that basically didn't prepare us for the next shock. Now we know these shocks are really scary. Let's learn from that and secure the peace as well as winning the war.